Dov, how are you?
I'm great. How are you, Eyal?
Good, good. Can you tell us a little bit about yourself, about what is a CPA?
Okay, well, let's start with the CPA. That's my favorite. CPA stands for Certified Public Accountant. It means that I'm certified by the state to represent the public on all tax and audit needs. Now, generally speaking, I don't focus at all on audit. My entire specialization is tax, international tax, and U.S. tax from a foreign perspective. So I work with a lot of foreigners who file their taxes here in the U.S.
So tell us a little bit about real estate rental income tax. How does it work if you buy a rental property and rent it out? What's the tax?
Okay. So rental income is pretty much the same as ordinary income, which means it's pooled in with all your other income from all your ordinary income and taxed at your ordinary rates. One of the advantages are with rental income, as long as you're not a real estate professional, as long as you're just an ordinary individual who is just earning a wage and you have several properties on the side, those properties, the rental income is not subject to self-employment tax, which is somewhat of a benefit. It's treated as passive and therefore not subject to self-employment tax, which means it will actually be slightly lower than any income from your business or anything else.
Okay, that's good. What about the capital gain when you decide to sell the property and you make some profit?
If you fall, normally, if your income for the year puts you in the 0 to 15% tax bracket, you actually don't have to pay any taxes on your capital gains. If you're above the 15%, then you go into the 15% tax bracket. If your income is up, I think, over 250,000 or so, then you go into the 25% rate. But most of us are going to fall into the 15%, and it's pretty much we're subject 15% on the profit from the sale of the property. Now, one thing to keep in mind that I'd like to add is always is what we call depreciation recapture, and that is the component of the sale that's attributed to depreciation that actually is taxed at ordinary income rates, but it's limited to 25%. So you can actually wind up paying more than your normal capital gains rate because of that extra depreciation component. But bear in mind, when we deducted it from your rental income, if your ordinary tax rate was 37%, then we actually reduced your income by 37%. When you're recapturing it, you're only paying up to a cap of 25%. So we definitely want to take as much depreciation as possible.
Okay, good. And one more thing, it's better to, if you do fix and flip, you don't want to sell the property within less than 12 months since you purchase it, right? There is a point about it.
So yeah, so with flips, normally, you want to buy and sell as quick as possible, right? But because you're buying and selling as quick as possible and you're not holding it for a year, capital gains don't apply, and instead you go back to the ordinary rates, which can go up to 37% on the federal tax bracket. But there is one thing to keep in mind with flips. Flips, we don't really treat them as real estate, we treat them as inventory. And since it's inventory, all of the costs, suppose you bought a house for a flip in October and you sold it in February. So normally, any other property, you would capitalize the costs of the first year, and you wouldn't be able to recognize those costs until you sold the property. Because we treat flips as inventory, all of your expenses along the way of preparing this unit to be sold, you can deduct immediately.
Amazing, that's great. Now I have a question about purchasing a property. Better to do it under your personal name or to open an LLC?
Okay, so we always want to set up your company under an LLC just because you get more protection under the LLC, okay? Because at the end of the day, it doesn't happen very often, but if you have some sort of, lawsuit against the properties and the LLC, whoever's suing you is limited to whatever is your at-risk basis, whatever assets you have in this partnership, in this LLC. Now, I did kind of slip in partnership because it's normally smarter to set up your LLC with a partner. It gives it more actual protection because there are cases where you set up as a single member LLC and courts have ruled that it doesn't really offer you the protection that,
This is more of a legal reason or taxation reason?
Okay, so LLC is always for legal reason. As far as taxation is concerned, there's really no difference whether or not you set it up under an LLC or not. Because at the end of the day, an LLC, even if it's a partnership, it's a pass-through entity. It normally doesn't pay taxes on its own. There are several states that do tax LLCs, but let's ignore those. So generally speaking, an LLC is not taxed, and the income is passed through to the individual, and then you're taxed. So it really doesn't matter for tax purposes. If you own it directly or you own it to an LLC, you can make all the same deductions. Everything applies. There's really no difference.
I wanted to ask you about non-residences versus residences. Is there any difference in taxes?
Well, I guess the big differences would be that because, residents and U.S. citizens, they normally have ordinary income. Normally, they're going to be in a higher tax bracket. So versus someone who's from overseas who's investing here, only his U.S. income is subject to tax, and therefore his tax bracket's going to be much lower. Another thing to keep in mind is inheritance tax. Here in the US, we're allowed that lifetime exclusion of 13.6 million, I think is the amount it is right now, while foreigners are only limited to $60,000. So just for comparison's sake, suppose you have an asset that's worth $300,000 at the time of death. Based on the tax rates, I did the math the other day, it comes to about $67,000. And that's an extremely high number. That would be 22% of the value of the asset, not actually the profit on the asset.
So there is a solution for that?
My favorite option is to set up tiered partnerships. And using tiered partnerships, because US situs assets does not include interest in a partnership, ultimately the transfer of an interest in a partnership wouldn't trigger inheritance tax for foreigners.
So you can put your kids as the partnerships, right? As one of the partners.
I would suggest to begin with setting up one of your inheritors as, say, a 1% shareholder in your upper tiered partnership.
And then you can change a percentage, obviously.
And you can change a percentage. In fact, what you also do, as a real estate guy, you would probably know that if you're going to sell a house, right? Normally, they'll always look at the first layer. They'll look at the first LLC and they'll say, who are the owners of this first LLC? Well, in the first LLC, you'll have another LLC, which is the management company that's managing it. Normally, that's where you stop. You don't have to start looking who are the upper owners.
Exactly.
At which point, that's it. That upper LLC can sell the property and we're done. And that's really the whole trigger. The whole trigger of inheritance tax is the guy dies and now he needs to sign over his assets. There's no trigger for that whole inheritance tax altogether.
Nice. Now I heard about a new law. It's called OBI.
BOI.
BOI, sorry.
Yes, BOI.
So what is BOI?
BOI stands for Beneficial Owner Information. And all they ask is that every company, every LLC, single member, multi-member, LP, corporation, there are various exemptions. It's just required to go ahead and file, to go report the controlling interest and the management of the company. So pretty much you have an applicant and you have any member who owns or any shareholder that owns 25% or more needs to be included on this report. It's a very simple report actually. If you fail to file on time, there is a penalty of $500 per day, up to a cap of $10,000. But most of you shouldn't fall into that trap because it's so easy to file. Just log into their system and it's self-explanatory how to submit the filing.
Understand. Okay, Dov, thank you so much for coming here. Thank you guys for watching and I'll see you in the next video.